Hello, everyone, and welcome to Connect, the podcast of the California MBA, where strategy, innovation, and leadership come together to shape the future of mortgage finance. This is where voices and ideas driving our industry forward meet real-world execution. My name is Paul Gigliotti, CEO of the California MBA, and if you're here, you care about building better for your business, your clients, and the future of housing. Before we jump in, I want to give a special thanks to our 2026 President Council sponsors whose support makes these conversations possible. So I'm giving a shout out to AmeriHome, Consolidated Analytics, Loan DNA, Funding Shield, CMG Finance, Guild Mortgage, Rocket Mortgage, Wiener, Brodsky, Kidder, and Western Alliance Bank. Again, thank you for your continued dedication and support and participation in all that we do at the California MBA. All right, so today I'm thrilled to welcome Ron, who is the Senior VP of Default Servicing at Dovenmuehle Mortgage, one of the nation's most experienced mortgage subservicers. And I can speak to their level of experience and professionalism and dedication in just a few moments. Little background on Ron. He's spent his career in special servicing and loss mitigation, helping organizations support homeowners through hardship while navigating the investors and regulatory requirements that still have to be met. And that's no small feat. That's a huge task. Ron has also become a very trusted partner of the California MBA. Ron has leaned in directly into servicing conversations for the Southern California wildfire relief and rebuilding work, bringing the operational perspective we need to turn strong ideas into something that can actually work for homeowners. That matters to me because this is a huge initiative the California MBA has taken on in partnership with CalHFA and the state of California, as well as Guild Mortgage, CMG Mortgage, Prudent AI, and Cotality. It's bringing the right experts to the table in building an actual path forward. And members like Ron and Dovenmuehle are what makes that possible. So Ron, thank you for being here and welcome to Connect. I set a big stage for you, my friend.
Yeah, thanks so much, Paul. It's a great opportunity to be with you here. We certainly are appreciative of you and the CMBA's engagement. So looking forward to our conversation.
Yeah, it's going to be fun. So we've got a lot to go through. And I think I want to jump in first, if you don't mind, and kind of look at the human side of disaster servicing. That's top of mind for me and our partnership. We've been working on that quite a bit for a while. We were, on the phone in meetings multiple times a week, and I think it's about to start up again. So let's look at the human side and disaster servicing, and let's talk about the borrower. So think about it, right? When a natural disaster hits, it destroys or severely damages a home. Everything that a homeowner has to go through, the borrower is suddenly trying to navigate insurance, temporary housing, their family's needs, mortgage payments. Then they have to jump into rebuilding, right? Which is an enormous amount of certainty. Contractors, architects, permits. Like I couldn't imagine going through that, and as well as living through a natural disaster. From your perspective, Ron, what needs to happen from the servicing standpoint in those first days and maybe weeks? And how does Dovenmuehle balance speed, empathy, and efficiency, as well as the investors' requirements and regulation guidelines? That's a lot in a really stressful time.
Yeah, I mean, Paul, it really is. And I think, going through an unexpected natural disaster that just brings forward a number of hardships, right, in your life is very difficult. So, we recognize that, after the customer looks after their health and safety, of course, their mortgage company is somewhere next in line as a point of contact. So we think, being reactive may kind of contribute to a poor experience, waiting for them to kind of call you. So really in the very first days, we kind of begin this hybrid approach where one, we posture ourselves to be sort of proactive and outreach to borrowers that have sort of been declared or designated in a disaster area, if you will. And then we begin to sort of have this like immediate deployment of all self-service options that really allow the borrower to initiate a request for, hardship assistance, which we make available 24/7, 365, as well as giving them appropriate, disclosures with respect to the appropriate information that, they need to engage, let's say, our escrow team if they're already sort of thinking about the rebuild exercise. I will also say that, one of the things that is just always kind of a continuous thing for us, whether a natural disaster exists or if we're preparing for one, is we put a lot of effort into sort of what we call our behavioral talk off. I think that the last thing a disrupted borrower wants is a human sounding like a robot. So we spent some time training our employees on how we can expect the call to be guided versus exactly telling them what to read.
Right.
There's a human element that you still need to ensure is present in these type of calls. So we believe giving our agents a blueprint versus a script is the right approach. And so, when you think about those things, so there's some of the more immediate reactions that we have in the first couple of days to sort of prepare ourselves for what we can expect coming forward.
So a question for you, Ron. So like let's take ourselves back to, more than a year and a half ago when the wildfires broke out. Just from the top of your head, do you prep as soon as you hear from FEMA that an area has been declared a natural disaster in the United States? Do you and your team automatically start to prep for, where's the disaster? Which one of our customers are being affected by it? And what is our response going to be? Like, is it like an immediate task force that you gear up and to support your customers?
Yeah, that's exactly right. So there's an existing blueprint to this, right? And
Yeah.
sort of to kind of speak more to what happens under the hood, if you will.
Yeah.
Obviously, we have a sort of automated process that allows us to sort of cross-reference every single loan that we have located in sort of what we believe to be the disaster impacted area. So, giving a first look into what we believe could be impacted customers, we start ensuring we have proper taggings on those particular loans to ensure that wherever that interaction happens with that customer, we're aware of their situation so that we're prepared to even inquire on it. Because a lot of times you'll speak to that customer and they may be calling on a separate issue, but they're designated in an area. So we still want to be able to ask the question and just proactively educate. So we do sort of a heavy lift of cross-referencing
Mhm.
to make sure we understand sort of the sandbox that we're playing in with regards to impact. And then immediately, given that servicers like us and many others partner with some national vendors that help us in that space when it comes to sort of the property inspection, preservation, piece of this, we immediately engage with them for preparedness, right? Saying, hey, here's the impact, here's sort of the resource allocation we may need, and we prepare different types of products so that if it's drive-by inspections, if even viable and available, we're on the ready. But at the same time, we're dynamic in the sense of being able to do drone inspections so that we're also
Oh,
sort of aware of what's kind of happening. So
nice.
those are some of the things amongst others that are happening sort of under the hood that sort of immediately come into play, if you will, within the first couple of business days when we receive sort of a natural disaster. I would say kind of before the declarations even incurred, right? Because
Okay.
you'll start to say, "Oh, storm's coming," or "the wildfire's spreading," and so we start data mining that proactively, and then
Okay.
ultimately, what kind of lags behind is the actual declaration itself.
Yeah. So as you're talking, two words come to mind, or two minds come to word. I guess that was weird, but anyway, as you're talking, two words come to mind. I'm thinking proactiveness and collaboration. From what I've experienced, and I've just started working with Dovenmuehle this year, but you guys show up in a major way to support the industry and to support the customers. It's something that I really appreciate. You don't watch from the sidelines, you jump in, which to me, speaks to the authenticity of your organization and the desire to support, but obviously be a profitable, business.
Sure.
You and your team, you specifically, and the rest of your team have shown up, shared real servicing experts that has quite honestly helped us, the California MBA, and our lobbyists think through the actual work. And what's impressive. And what I have such gratitude towards is that helped shape bills. Like you and your team were a huge instrumental part in supporting, us becoming neutral or supportive of a couple of forbearance bills. But from your perspective at Dovenmuehle, why is it important for Dovenmuehle to participate? And where do you believe a trade association like the California MBA can create value that an individual servicer or lender cannot create alone?
Yeah. So I think with respect to why we feel it's important is, speaking for Dovenmuehle for briefly, we have such a large presence in the state of California when it comes to servicing. Our diversity is our strength, given that our California clients range very dramatically from national banks, credit unions, the HFA, IMBs, and all sizes of depositories, small to large. So when DMI has a seat at the table, we're speaking for many different financial institutions
Hmm.
that make up sort of that California servicing ecosystem, if you will.
Right.
To your other point, many times when you have legislation in motion, it's kind of very difficult to to intercept, if you will, where they're at in the process. And so the idea is, hey, finding the right interception point in order to share your thoughts and concerns or even revisions, et cetera. And at the same time, being the voice of one versus the voice of many, I think creates more attention to those considerations that us servicers would like to see. However, the voice of many sometimes may be a little bit chaotic, if you will, to the author or sponsors of the bill. So that's why I see the role that California MBA just played in our recent exercise, and of course on a go-forward basis, is so valuable. I think you guys really did an outstanding job in sort of centralizing the comments of many, as I mentioned, and in turn found like the right path to engage with the legislator to incorporate some of those revisions. So, obviously we're super thankful for that partnership to give us an opportunity to sort of at least have the ability to have sort of some sort of fingerprint on the outcome of the bill, if you will.
Yeah, it's collaboration and great partnership. And what's great about it is you can't do it alone. One can't do it without the other. The association and the participation from the industry itself. Um, so as we're talking about our partnership and how you've been supporting, obviously the bills that we're speaking of, or the natural disaster, specifically the Southern California wildfires, we're talking about forbearance. So let's jump on that bandwagon for a hot second. Obviously, our industry knows about forbearance, but I think a lot of legislators and some of the consumers don't really quite understand how the intricacies of forbearance and what that means. It's an important bridge. It gives families the time to breathe, but the end goal cannot simply be more time. There always has to be a path back to home, rebuilding these communities. And that was the purpose and premise around our collaborative effort. Let's get these communities back at home. Let's get, the homes rebuilt. Let's not kick the can down the road anymore. Let's get a solve in place. Once rebuilding begins and the process becomes more operationally complex. Insurance proceeds, inspections, draw schedules, as you know, liens, existing mortgage obligations, and in the case that we're dealing with in Southern California, the gap between insurance payout and actual cost to rebuild. Now, thankfully for the state of California, we have a governor's office that has jumped in, and we've been able to source $100 million for the
Right.
rebuild fund for disaster relief. But that's not always the case. Where do these pieces often break down? What's the breakdown, Ron? And what must the industry do better to keep homeowners rebuild efforts moving forward? That's a big question.
Yeah, it's a big question. It's an important question. I mean, to your point, forbearance is really just a temporary instrument.
Yeah.
If there was a magic wand that we could wave to make the rebuilding process uniform nationally, sign me up. But the reality is, depending on where you live, the path to rebuild will be different, maybe complex, potentially lengthy. I think the consistent area of opportunity tends to exist on the expectations that may be set between like the homeowner and homeowner's builder versus what the actual expectations are, between the homeowner and their mortgage partner. right? So educating the borrower early in the process on setting the expectation, I think, is sort of a positive step forward. However, as an industry, while I believe we've done a good job, that does not mean the good can't get better. I think collectively with industry participants such as yourself, the state, I think exploring a centralized point of contact or forum for borrowers, their builders, et cetera, to sort of initiate the interaction with their mortgage servicing partner, if you will, might ease some of the headwinds that these borrowers face when they just experience a disaster event. It also helps sort of demystify some of the expectations that they begin as they begin their journey to rebuild. So in my view, offering them that sort of single point of contact view um, may sort of d- diminish or reduce the headwinds that they ultimately face, but give them the education not only that they need, but at the same time, these home builders that they're also engaging with, right? Because
Mhm.
they're an important part of the conversation. So I think keeping us all sort of centralized as to what the expectation is helps, the process, if you will, from that standpoint.
Yeah, absolutely. That makes a lot of sense. So taking that, walking through, you know, best steps for homeowners as well as, those in the industry, solution providers in the industry, participants in the industry. Let's look forward. If we're having this conversation from a year from now, what would success look like for the families rebuilding? And also for the participating servicers and lenders?
Yeah. So, I mean, I think the best way to answer your question is start with like its core objective, which is like to establish the pathway of least resistance for the consumer when it comes to like the
Yeah.
unexpected and unfortunate experience of a natural disaster event. So in almost all scenarios, the servicer will play like a material role in that journey for the borrower. So ensuring that we are sharing our insight on how to limit customer agitation and just talking through the different nuances that exist is pretty much essential, at least in my view. So without that voice, I think you may end up with a product or program that may create other challenges or miss the opportunities to address some obstacles in the process today. Um, is generally my view of that.
Okay. Out of curiosity, when and I'm sure this is a question a little bit more aligned for the consumer or other solution providers in the mortgage lending industry. When a consumer calls and says, "I need forbearance," is it thoroughly explained to them what forbearance is? There's some nomenclatures out there from some of the from some victims, and I'm sure not just the Southern California wildfire, but there's an idea and concept where that money is kind of forgotten about. Is it explained? Is it part of your workflow to sit down and say, so forbearance is basically a band-aid and X, Y, and Z? Like, do you have that step in your process?
It's such an essential part. I think you fail the consumer without that education. I think to your point, a lot of times the borrower is coming into that inquiry with some sort of background or context as to what they've been told or what they should believe the forbearance is. And setting the expectation is everything, right?
Yeah.
We mentioned the forbearance is a temporary instrument. Ensuring that they understand it's not a forgiveness of the debt is essential, but in our view, in our approach, understanding that continued engagement with them is really everything, right? Because the situation today isn't the situation tomorrow, especially in a natural disaster situation. So setting the expectation, making sure that we're establishing different points of contact in the future and for them to understand how important that is because, we said it's a temporary instrument. So there's going to be another engagement to help
Right.
them resolve what, they just went through, whether it's the amount that needs to be paid over a particular time or what other options may be available to offer them a helping hand. So that particular educational point, at least in our view, is really just such an important part of the conversation. Because as we just said, I think they come in with an expectation, and I think it's our job to sort of clean up those blurred lines, if any, during that initial engagement.
Absolutely. That's wonderful to hear. And I appreciate that. I think, I often say as I'm, a leader, at our association or networking or having conversations, even with my kids, knowledge is power, right? So if you understand what you're stepping into as a consumer, you've got the knowledge to make an empowering decision.
Right.
And so the education behind what you provide your consumers, that's so key. Obviously, in a stressful time, I know, in stressful times, I might miss some of the detail. So I know you and your team
Right.
also follow up with documentation, additional calls, like, all right, hey, so when you're signing this is really what it means. You've got to pay that, $4,000 a month times 12 months plus interest back. And we'll take care of it one of, a handful of ways, depending on how it works with your investor, right? Because that's also key.
Exactly. Exactly. Exactly.
Um, Ron, I can't thank you enough for your insight, your guidance, especially the way you and Dovenmuehle have shown up for this work. Your participation, as I said in the beginning, gives something essential, the perspective of people who understand how servicing works in the real world and who are helping and who are there willing to help and rebuild and support in a path forward. The California MBA is steadfast in ensuring that um, lawmakers understand how their proposed bills will really affect the industry and ultimately the consumer. And we can't do that work without partners like you. So I really appreciate, your time here today, your participation in our association and how active you guys have been, you and your organization in the past 6 to 8 months. So thank you for that.
Yeah. Well, Paul, thank you for giving us the opportunity. And, I also want to say thank you and others that have the patience that you have. Because as you know, I'm sure, servicers like us and others have a lot to say. And so being able to take those considerations into play is really valued. So thank you and the entire organization for giving us that opportunity. It's our pleasure to
Absolutely.
participate.
Absolutely. And it's been fun. So for our listeners, this conversation really is a great example of what the California MBA membership and partnership is meant to create our purpose. We bring the industry together, we identify the problem, and then we work together as a solution. So true collaboration. The wildfire recovery cannot stop at temporary relief, as we were talking about. Forbearance is just a band-aid. You have to move forward with an idea and a concept with the goal of rebuilding homes and communities and lives. So, Ron, again, thank you for your leadership, joining me here today on Connect Podcast. To our audience, thank you for tuning in. Advocacy is constant, innovation is constant, and execution is what separates. Until next time, stay engaged, stay sharp, and keep building with purpose. Thanks again, Ron.